Speaking of AI, Nvidia is also moving on AI headlines today. That company could be a second derivative winner of the AI arms race. That's according to a new note from Bank of America's Vivek Arya, saying data center sales could quadruple in the next 5 years. Vivek joins us now. He also raised his price target on Nvidia to $255 from $215. Vivek, so do you think this is an underappreciated story for Nvidia?
Yeah, thank you, Sarah. I think 2 points to make. First is that we are in very early stages of this generative or conversational AI technology. And like any new technology, it goes through its hype cycle. But we think over time, it can be very profoundly disruptive, very much like the early days of the internet. And the way to get exposure is through the picks and shovels companies, because you just don't know which specific cloud or enterprise application model is going to be best able to monetize it. So you invest in companies that are really very well positioned from a picks and shovels perspective, which is Nvidia. The second thing, let's assume generative AI is going through a hype cycle and it never gets big. What is still very important is that we look at the mountains of data that is being created, and a lot of this data is voice, video, images. The way to process this, the way to get insights from this is really through accelerated computing. And that's a new form of computing where you need the full stack approach that Nvidia brings to the table. So we think with or without generative AI, the company is extremely well positioned.
Are they better positioned than their competitors? We were just talking about Cadence. We were talking to Cadence CEO about where this is all going. So how far ahead is Nvidia than, say, an AMD or an Intel or another big Micron chip maker?
Absolutely. So we think Cadence and Synopsys are actually suppliers into NVIDIA. They help NVIDIA design those chips. So we think they're also going to benefit from this trend. But when it comes to within the broader semiconductor industry, I think it's very hard to come close to where NVIDIA is, because this is not a chip game. This is not just making a chip and throwing it at the customer. You have to take that chip, you have to turn it into a system, you have to add software, you have to have developers around it, and then you have to do all those things at scale. And that is something where I think NVIDIA is very uniquely positioned. But as the market grows, it is going to create more opportunity for the likes of AMD, Marvell, Broadcom, and others. But when it comes to the 60, 70% market share, I think it's very hard to beat NVIDIA at that.
I guess the counter-argument would be, Vivek, that this is a stock that's already up almost 60% year to date. It's like barely even February already. It's had quite a run off the lows. So it's an interesting time to be raising your target.
No, that's a fair point, Sarah. And next week the company reports, and we have previewed before that there is a potential for some slow down in cloud capex very early in the year. There's also the timing of when their new Hopper H100 product starts ramping. So there could be some volatility near term. But as we look past earnings, in March, they are going to have their GTC conference, where I think we will learn a lot more about the use cases that their products are getting involved in. So I would suggest that the call that we are making is a medium to longer term call. But next week, there is the chance for some volatility in the stock as they report earnings.